Let's break down the mystery of the credit score. If you've ever wondered what those three little numbers mean, or why everyone seems to care so much about them, you're not alone. Credit scores can seem confusing, but once you understand the basics, it all starts to make sense. Think of it as your financial CV, a three-digit number, usually between 300 and 850, showing lenders how reliable you are with money. Just like a CV tells employers about your work history, your credit score tells banks and lenders about your financial habits and how you've managed credit in the past. It's a snapshot of your borrowing history. Have you paid bills on time? Do you have lots of debt? Are you on the electoral roll? All these details are gathered to paint a picture of how you handle your financial responsibilities. Even small things, like missing a payment by a few days, can have an impact. Three main UK agencies, Experian, Equifax, and TransUnion, each calculate your score a bit differently, but all use your payment history, credit usage, and public records. They collect information from banks, credit card companies, and even utility providers to build your credit profile. It's not personal, it's just data. These agencies don't know you, they just see numbers and patterns. They're not judging your character, just your financial track record. Your score isn't set in stone. It changes as your financial habits change. If you start paying bills on time, reduce your debts, or open a new credit account, your score can go up or down accordingly. It's a living, breathing number that reflects your current financial health. That means you're in control, make better choices, and your score improves. It's empowering to know that your actions today can shape your financial opportunities tomorrow. Lenders use this number to decide if you're a safe bet or a risky gamble. When you apply for a loan, mortgage, or even a mobile phone contract, your credit score helps companies decide whether to say yes or no, and what terms to offer you. High score? You're a good bet. You'll likely get better interest rates, higher credit limits, and more financial options. It's like having a golden ticket to better deals. Low score? Lenders get cautious. You might face higher interest rates, lower limits, or even be turned down for credit altogether. But don't worry, this isn't the end of the road. Remember, it's not a judgment on you as a person. It's a tool for businesses. It helps them make quick, fair decisions based on facts, not feelings. Once you understand how it works, you can use it to your advantage. Knowledge is power, and knowing what affects your score means you can take steps to improve it. Even if your financial past isn't perfect, you can always improve. Every positive step you take, no matter how small, helps build a stronger credit profile for the future. Think of your credit score as a fitness tracker for your finances. Just like you'd track your steps or heart rate, your credit score tracks your financial habits and progress. The more responsible you are, the healthier your score. Consistency is key. Good habits over time make a real difference. Lenders want to manage risk, and your score helps them do that quickly. It's a shortcut for them to understand your financial reliability without knowing you personally. Understanding this is the first step to taking charge. When you know what goes into your score, you can make smarter choices and set yourself up for financial success. Now, let's see why this number matters so much, and how it can open doors to the things you want in life. Why care about your credit score? Because it's your financial superpower. A good score unlocks cheaper credit, lower interest rates on mortgages, loans, and credit cards. It can save you thousands over the years. With a strong score, you're more likely to get approved and have more choices. It's not just about loans. Mobile contracts, broadband, and even some insurance companies check your score. A poor score can mean higher costs or big deposits for basic services. A good score gives you freedom and peace of mind. It's a safety net for life's surprises, like car repairs or emergencies. Building a healthy score is investing in your future self. It gives you flexibility and control over your financial journey. That's real power. If you remember one thing from this chapter, let it be this. Paying your bills on time is absolutely essential for your financial health. No matter how busy life gets, make it a priority to pay every bill on time, every single month. Payment history is the single biggest factor in your credit score, making up about 35% of your total score. Even one late payment can stay on your credit report for up to 7 years, dragging your score down and making it harder to get approved for loans or credit cards. To avoid this, set up direct debits or automatic payments for all your regular bills. credit cards, loans, utilities, and even subscriptions. At the very least, automate the minimum payment amount. This simple step can save you from costly missed payments and late fees. If you ever find yourself struggling to pay a bill, don't ignore it. Contact your lender or service provider immediately. They may be able to offer a payment plan or temporary relief. Many lenders are willing to work with you if you reach out early, before you miss a payment. Keep a master list of all your debts and their due dates. Use your phone, a calendar, or an app to set reminders a few days before each bill is due. Remember, every account matters. This includes old store cards, buy now, pay later deals, and even small utility bills. Consistency is key. By proving you're a reliable payer month after month, you build a strong credit score and a solid financial reputation. Make paying bills on time a non-negotiable habit, just like brushing your teeth or locking your door at night. Missed payments are the fastest way to damage your score. Stay organized, stay proactive, and review your accounts regularly to catch any mistakes. Your future self will thank you for the discipline and effort you put in today. Paying your bills on time is the foundation of a great credit score and a stress-free financial life. Next up, credit utilization. This is how much of your available credit you're using. High utilization, using most of your limit, makes lenders nervous, even if you pay on time. Try to keep your utilization below 30% on each card and overall. Under 10% is even better. Pay down high balances first for a quick score boost. Remember, lenders report your balance monthly. Try to pay off big purchases before your statement date. Low utilization shows you have credit, but don't rely on it. It's about perception. You're in control, not the debt. Manage your balances smartly and your score will thank you. This is a simple way to improve fast. Meet Sarah, a dedicated teacher who always believed her finances were in good shape, until the day she applied for a mortgage and was unexpectedly rejected. The news came as a shock, leaving her confused and anxious about her future plans. Determined to find out what went wrong, Sarah dug into her credit report. She discovered that a nearly maxed-out store credit card, which she'd barely thought about, was quietly dragging her score down month after month. Even small debts with high utilization can be a red flag for lenders. It's not always the big loans that hurt you. Sometimes, it's the little balances that slip under the radar and do the most damage. Realizing this, Sarah took action. She used her savings to pay down the card, reducing her utilization from a staggering 96% to just 16%. It wasn't easy, but she knew it was necessary for her financial future. The results were almost immediate. Her credit score jumped by nearly 100 points in just a few weeks, opening doors that had previously been closed. With her improved score, Sarah was finally approved for a mortgage. She moved into her very first home, turning a setback into a major life milestone. The lesson here? One targeted action, like paying down a single card, can make a huge difference in your financial journey. Don't ignore small, forgotten debts. They can quietly undermine your credit health without you even realizing it. Make it a habit to check your credit report regularly, spot the problems early, and take action before they grow. Sometimes, a small fix, like correcting an error or paying off a forgotten balance, is all it takes to see real improvement. Your credit score can change quickly with the right move, and the impact can be life-changing. Be strategic. Focus on what matters most, and don't be afraid to ask for help or advice if you need it. Remember, you have the power to turn things around, just like Sarah did. You can't fix what you can't see, so check your credit reports. Get your full report, not just the score, from all three agencies: Experian, Equifax, and TransUnion. Use free services like ClearScore, Credit Karma, or MSE's Credit Club. Make checking your report a monthly habit. Review personal details: name, address, electoral roll status. Registering to vote is a quick way to boost your score. Scrutinize every account. Look for errors or old accounts you thought were closed. Dispute any mistakes with the agency and lender. Fixing errors can transform your score. Stay vigilant. This is your financial health check. Knowledge is your first line of defense. Let's talk about hard searches. Every time you apply for credit, it leaves a mark. Too many applications in a short time can hurt your score. Use soft searches or eligibility checkers before applying to avoid unnecessary marks. Only apply when you're likely to be approved. Now, about old accounts, don't rush to close them. Older accounts help your credit history and keep your utilization low. Only close cards if they have high fees or tempt you to overspend. Otherwise, use them occasionally and pay off in full to keep them active. Smart management of applications and accounts protects your score. Be strategic, not impulsive. Starting from scratch? You need to build a credit history. Try a credit builder card. Use it for small purchases and pay off in full every month. Never carry a balance. The interest rate doesn't matter if you pay in full. After 6 to 12 months of perfect payments, your score will improve. Can't get a card? Use services like Lockbox or Experian Boost to add positive data to your file. Lockbox reports your savings as loan repayments. Experian Boost counts regular bills. These tools help you build a track record without taking on debt. Consistency is key. Responsible use builds your score over time. Start small, stay disciplined. Your future self will thank you. We've demystified credit scores and given you a clear action plan. Improving your score is about smart habits. Pay on time, keep balances low, check your reports. Identify your biggest negative factor and tackle it first. Start with one change this week. Register to vote, set up direct debits, or pay down a card. Each small step adds up to big results. Watching your score rise is motivating, it's proof your efforts work. You're taking control of your financial destiny. Your credit score is more than a number, it's a key to a better future. Less stress, more choices, cheaper borrowing. The path is clear. A little effort, lots of consistency. Your financial future is in your hands. Take action, shape your destiny. You've got this.